We can literally attract anything we want in our lives because we're in alignment. So, I want to talk about your shadow self today. This is a topic that I have been throughout this entire week training my teams with, and it's been so fulfilling for them because it's just so powerful. It's so powerful. Not everyone speaks about your shadow self. What is your shadow self? And when it comes to trading and when it comes to even building, that's what you want to do because John C. Maxwell says that the most difficult part in leadership, the most difficult thing in leadership is being able to lead yourself. That's the most difficult part. So, our job isn't to lead others, our job is to influence others to lead themselves. I'm going to say that again. Our job isn't to lead others, our job is to influence others to lead themselves. We're not here to lead others, we're here to help other people lead themselves because, again, that's the most difficult part in leadership. And if we don't got that down, if we can't even lead ourselves, how can we be entitled to lead a group of people? How can we be entitled to lead all of whatever you want to come into your life, your family, literally your spouse, your wife, and anything that comes into your life. So even with trading, literally even with trading, getting to know your shadow self. I know that, well, if you've just gotten started and you haven't traded yet, but if for the traders that have already been trading, I'm sure at one point in your trading career, you felt the greed. You felt the, okay, let me get into this trade and let me go into another trade to make it all back in an instant. That's greed. And you know that you don't make it back, you know that you end up losing that, but because you're not conscious of your shadow self. So I'm going to talk to you guys about a little bit about shadow self, and then we can go dive into our charts, and I'll show you guys what I see for New York session, which is about to start in about 2 hours. So I am hyped for that too. So the first thing that you want to ask yourself, this is kind of a conversation you want to have with yourself, and your shadow self isn't bad, it's good, it's a good thing, because if you're conscious of it, now you can come into terms with it and now even reach your true potential, even reach what you want to do. So the first thing is, what are you addicted to? What are you addicted to? Whether it be social media, whether it be eating, whether it be I'm just thinking things off the bat. um Going out with your friends, or I mean, I don't know, I don't think anyone could go out in this time, but just talking to your friends so much, or just doing all of these other things that aren't fulfilling what you need to fulfill in your goals, then those are your addictions in this life. The second thing you want to ask yourself is, what is your what are you doing to heal yourself? What are you doing to heal yourself in every sense? So, example, what are you doing now that is helping you heal yourself in the terms of, are you meditating? Are you writing down your affirmations? Are you writing down your gratitude? Not something someone else has to do for you. It's something you have to do for yourself. And that's most of the things that we have it. Like, we think that we're good. We think that we're perfectly fine. We think that we're in love with ourselves and stuff. But reality is that maybe we have some trauma inside of us, our childhood trauma that takes over us into our subconscious. And that doesn't allow us to actually reach our true potential. It suppresses our feelings, and we're not supposed to do that. So that's the second thing. What are you doing now to heal yourself? The third part is, what are you doing well, what are you doing now to actually have the reflection within you to learn how to assess your emotions, to learn how to assess how you're feeling, because again, we want to express our feelings, we don't want to suppress them. I don't know if you've ever been into a group of people and you get a text message, and immediately that text message changes your mood, and it puts you so sad. And because you're with a group of people, in your head you're like, okay, no, I can't feel this right now, I can't feel this right now, I can't feel this right now. That's you suppressing your feeling. Instead of doing that, you have to assess it, you have to feel it, because that's what feelings are for, to feel it. right? So just step out of the room that you're in, assess your feelings, release those tears, release all that anger you might have experienced, release everything, because if it's in you, it's suppressed, then that's what you're going to start exposing to everyone. And we don't want that. We don't want to expose our poison to other people. We want to assess it ourselves and keep it within us. And the fourth thing is, okay, the first one, what are you addicted to? What are you doing to heal? What are you doing to have those reflections? Are you feeling your emotions? Are you feeling what you're experiencing in that moment? Don't suppress it. And the fourth thing is, what are you being ignorant to? What are you being ignorant to? Not necessarily, well, yeah, what are you being ignorant to in your own life? What are you ignoring in your own life? Whether you know that you have to do something and you have to assess that, and you're like ignoring it because you just fear um being confronted of some sort of situation. So whether it be ignorant of you trading and you lost, but you go back into the market and thinking that you're going to make your loss back even 10 times more. That's you ignoring the fact that you just lost, and you need to assess what loss you just experienced. Because if we're not assessing that, then we're going to keep on doing it over and over and over again, and that's going to become a habit, and that's going to become a bad trading habit, and we don't want that. We want to do good trading habits. So with that comes in a lot of like inner reflection. It's not all outer exterior, all pretty, all blazzle dingle, all of these other things. No, it's not that. It's literally inside. So again, what are you being ignorant to? Whether it be that trade you got in, you lost or you won. Because again, if you're happy when you win a trade and you're so happy, you're like, oh my gosh, I won. And I say this because I was that type of person too. I won, I made this much money, wow, this is amazing. And then boom, I lost a trade and then I lost. And now the opposite of feeling happy is sad. That's the law of polarity. The law of polarity exists, right? So if we know that there's an opposite for being happy, it's going to hurt so much when we lose a trade. We're going to feel that we don't deserve this. We're going to feel that we're not capable of doing this. We're going to feel so let down of ourselves. And only, we're the only self critics, like the strongest self critics we have of ourselves. No one else criticizes you except yourself. You criticize yourself more than anyone else around you. And that's the worst part. If you're criticizing yourself in a good way, then that's good. But if you're criticizing yourself in a bad way, don't do that, because again, it'll just put you down even more, and you have the power to change that. You have the power to change that with your thoughts. So the last part is fear. What are you being fearful of? Whether it be actually executing a trade, are you being fearful of marking up a chart and it being wrong? Are you being fearful of speaking in public? Are you being fearful of doing a training for your team and showing them what you've been able to learn in the books that you're reading and all the trainings that you've received value from, all of these other things that have come into your life, and now it's your time to step up and start sharing what you've learned? Are you being fearful of that? I remember when I just started, I was so fearful of speaking in public. I was shy. I was super, super shy. I would never do a call like this. In college, I would literally sit in the back of the seat, back of all the classroom, and just like, no one look at me, ignore me. I'm over here minding my business. That's how shy I was. And now I don't do that. Now I've been able to change that because I asked myself, why am I so shy? We're not born shy. We're not born angry. We're not born sad. We're not born depressed. We're not born with all of these other negative feelings. We're born happy. We're born loving. We're born so abundant that we've been conditioned to think a certain way. That's how our life has been assessed. So again, the goal is to go back into how you were as a child, assess what kind of traumas you have. And that's what I did. I asked myself, why am I so shy? So I had to go back into my past and assess why I was shy. I had to go back to the root as to why I was feeling that way. So I come to find out that again, I wasn't born that way. I was conditioned that way. I was conditioned that way. My parents, every time I would want to speak up or say something or share an opinion, my parents would just say, "No, that's not good. That no, like that you shouldn't even say anything. Like no." And they wouldn't even let me talk. So that was the beginning, the root of me being shy. Now, obviously, I had to change that. Now I'm like over here just talking in front of everyone, like doing events and stuff like that. So it just really comes down to assessing that little feeling, like whether you believe it or not, it's a feeling. I don't care if your mind believes it or not. Your soul feels it. Your soul is receiving this information because it's what it's craving. So this is what I was craving. This is something I unknowingly had to crave in my soul. It wasn't something my mind needed to just think, 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 think. It's more of like your soul inside of you. So again, 90% of success is in the spiritual realm. This is us working on the spiritual realm. This is us. I'm giving you questions that I've asked myself personally in terms of how can I become better? How can I become better and meet my shadow self to now be friends with it? If whether it be greed, whether it be sadness, anger, all of these other feelings that feels your shadow self, okay, if I'm conscious of it, now I got the opportunity to actually switch it up. If I'm conscious of my greed and I'm about to execute a trade and I know that I know that there's risk in trading. So if I know that there's risk in trading, why am I going to over leverage? Why am I going to go all in one trade and not respect my trading plan? That's my ego. That's my shadow self. And if you can't come into terms with it, you're going to keep on doing the same pattern, same pattern, same pattern. I guarantee that because, again, that's what happened with me when I was just getting started. My first month, my second month, I completely ignored the fact that I had to go inside for my trading to get a lot better, for me to actually become better and want to share this business. Because if you don't feel it, if you don't feel the feeling of being so fulfilled, being so happy to actually go out there and talk to everyone about this business, then don't you aren't aware of the blessing that you have in your life currently because you haven't done the work internally. Okay? So again, that's something that I've been able to learn, and that's the psychological part in trading. That's the psychological, the inner spiritual work. Mike Miles always says that your trading results, the results that you have in your MT4 currently at this moment, is a reflection of who you are inside. So if it's negative, then you should be assessing something inside of you that's probably negative, that's not letting you thrive, not letting you see the market with the information it's giving you, but you're seeing it with the emotions that you're feeling. And if you're feeling negative, then you're putting that into the market. Think of the market as a mirror right in front of you, and this mirror is reflecting what you're feeling. So that's trading. It's going to reflect what you're feeling. So if you're feeling positive, then obviously your results are going to be a result of that, and it's going to be positive. So that's going to be a reflection of who you are. And when I heard that, I remember I was at a convention in Las Vegas, and that was the first time I ever heard that. And I was like, whoa. How is that like that? I just resonated with that so quick because it's so true. It's so true. If you're feeling negative, it's literally a reflection of who you are. Your results are a reflection of who you are. Whether it be building, whether it be trading, whether it be in any other business that you're in or anything else that you're pursuing, it's always going to be a fact. Like it's going to be a fact. It's not going to be anything that, oh no, right here I'm just okay, I don't need my emotions to work over here. You need it everywhere. We're emotional human beings, and that's the good part of being a human. So that is what I wanted to share with you guys in terms of psychology. Now I want to share with you guys a little bit about like the charts that I'm looking at, some setups that I'm looking at for today for New York session. It hasn't yet started, so of course we're just waiting for the setups to play out. And yeah, I'm just gonna go right into it. I'll show you guys the way I trade, how I look at the market, and don't take what I said lightly. Again, this isn't my job to my only job was to share the message. That was my job. My job was to share the message and obviously do the work. Do the work, do the work, the inner work. But if you're taking it lightly and you're saying, no, I don't really need that, then that's your ego speaking. The ego doesn't want to work on itself. The ego will never want to work on itself, and it'll want to neglect this information. So again, I'm not speaking to your ego, I'm speaking to your soul. So okay, so this is what I was looking at for AUD USD. I thought that I would look at this pair because Aussie and of course the Australian dollar and the US dollar. So before anything, we know that technically if okay, I don't know if we're all at the same page. I don't know how like new we are or if we are new, but I'll go over the DXY. So the DXY is the dollar index. The dollar index is technically what like the overall image of everything. So if the dollar index is going down, this gives me an idea of all the forex pairs that are being traded with the dollar. So I hope I don't confuse you with this, but it took me a minute to actually get it. So um, it's in Spanish right now, but I'm just going to translate it for you guys. So if the DXY is going up, then anything that's the base pair you already know it's on the basics information. The base pair is this, the USD. The base pair will be the first beginning thing that you're trading. That's your base pair that you're trading with. So if you're trading, and if you know that the DXY is going up, then that means the USD and whatever you're trading it with is also going to go up. USD JPY, USD CAD, USD NZD, anything is also going to match with it. And on the contrary, anything that is traded against the USD is going to go down. So if the DXY is going down, the base pair will also go down with it. And then anything that's being traded against the USD will go up. So it'll do literally the opposite. So I'm going to give you guys an example. Right now, what I'm looking at is at the DXY, of course. So we've been coming down in this range on a downtrend. This is a 4-hour time frame. We've been coming down on a downtrend, and we've been able to break out of that downtrend, and now we're consolidating. We're having a major consolidation on a 4-hour time frame. So because of this, I see that the market will come down because we have an imbalance in this area. We have liquidity around here. That's all of that liquidity. We have liquidity above here. We took out that liquidity and then we just dropped. We dropped, but we haven't yet filled this entire imbalance area. So what we're doing is we're coming down to fill it. So if we know that we're coming down, then I know that for New York session, this is going to most likely give me a bearish movement. So what does that mean? I'm going to go on to Euro USD and go look for buys. I'm going to go to AUD USD and look for buys. I'm going to go to any other pair that you're looking at, NZD USD, anything, literally anything, and you're going to look for a good setup, not trade it immediately. If it doesn't show you a good setup, no confirmation, no trade. That's it. No confirmation, no trade. This is the main confirmation, at least for me. What is the DXY doing? So my bias is that we are going to come lower for the terms of New York session today. So that's the 4-hour time frame. Let's look at the 1-hour time frame. Look how it comes down with so much strength, and it left a void here. It left a little gap. So right now it came back into that gap area, filled it up, and now it's dropping. It's dropping into the zone. So again, New York session isn't even open yet, so we're just waiting. Right now it's just consolidating in this area like this. So we'll wait until it breaks out of the consolidation, comes back up, and then gives us more confirmation that it's actually going down. Because when it consolidates, sometimes what it will do is just break out of the consolidation and then come down. So that's not what we want. We just want to be secure, right? So given the fact that we know that it's going to go down, then I'm going to go to AUD USD and show you guys the buy setup that I see. So on the 4-hour time frame, I don't know how. I'm just not gonna talk about it. Never mind. I'm gonna talk about Wyckoff, but um, I don't want to confuse anyone. That's another topic that's like probably gonna take an hour to like explain. So here in this area of what we're looking at, AUD/USD, we see that the market has been on an uptrend. Look at all of the trending up that it's been doing. Higher highs, higher lows, and right now it's here. It's here. Do you see the trend? Higher high, higher low, higher high, higher low. So if we know that the trend is upwards, what we're going to do is want to look for buys, right? So where was the previous area liquidity got captured? Liquidity got captured. Okay, so I'm going to take out my confirmations, and I don't really have a lot of confirmations, but I have 5. The structure on the daily. We're on the 4 hour, so regardless if we go on the daily, it's still up. It's very high up. So we're on the 4 hour currently. We've already identified the structure, it's bullish. The second one, identify your institutional candle. It doesn't have to be in order, trust me. As long as you see it, like whatever you see, that's good. It does not have to be in order. But identify, first, let's identify liquidity, and then we'll identify our institutional candle. So here, we have all of these equal lows, all of that liquidity on the 4 hour time frame. We come down and we capture it. We capture that liquidity. Okay, where else are we forming liquidity? We have liquidity above here, those equal highs. If you have not watched the Trading Sniper course, I suggest you do. You'll have a better understanding of it. So we have money above here, and we know that the banks, how the banks work, they always capture liquidity. They always capturing liquidity. So we just captured this liquidity to the downside. What's the next liquidity that we have to capture? The one above. And we just saw that the DXY is going to go down. So if that goes down, this one's going to go up. And same goes with Euro USD. So which one was the candle that captured my liquidity? This candle right here. That one's the one that captured my liquidity. Now that's going to be my institutional candle. What are institutions? Why is this called institutional trading? It's called institutional trading because the banks, we're trading the way that the banks are trading. So if we know where that institutional candle is, then we can trade in that area. But if we don't see it, we don't trade it, okay? Is it possible to change the color of writing in your text box? Yeah. I don't know. Let me just change the entire thing to a more simple color. Okay, I hope that helps. Okay, so identify if there's any imbalance areas. Okay, perfect. And the entry was already there, but we're looking for a re-entry for New York. It gave it off on London session. So here are areas of imbalance. Imbalance. So what do I mean by imbalance? Look at the spacing it gives. From here, from wick to wick, there's a space. I'm going to take this out. Look at it. From wick to wick, there's a space. That's imbalance. Just like how we have imbalances in our life, we have to balance our chakras, we have to balance our life and get ourselves together. The market has to do the same exact thing. It's a reflection of us. It's no different. It's human consciousness working in so many patterns, but just with money, just how our consciousness thinks with money. So if there's a void here, there's an imbalance. Then there's another imbalance above here. And look at over here. Then all of this, like you have all the wicks that are so together. That is healthy price action. This is not healthy. It will come back to fill it up again, just as how it's doing right now. So now going back to the imbalance, I'm going to highlight the entire zone as a zone of imbalance. And let's pull up this right here, my institutional candle, imbalance. Now, I want to identify, look to buy or sell at a discount price using my Fibonacci. So now my last confirmation, I've already done that. I love to have, the more confirmations you have, the better, but the more simple it is to you, at least when you're just starting, even better. because you're gonna get it. So the last confirmation from all of this is just to identify a setup. We're gonna grab the Fibonacci from the low all the way to the high, and we see that in this specific area, the one that matches the most is either 61.80% or the 70%, and we have not yet gotten to that level. So I'm gonna have this marked up. I'm gonna just put a little line for my 70% right here. And now what we're gonna do, I've already looked at all of this. So now what we're going to do is go on to smaller time frames, and identify where we can get a better entry off of this institutional move. Okay, so let's go on to the 1 hour, and we're going to be FBI investigators. That's what we're going to be, FBI investigators, and see what happened into this institutional move down here, and then have a better entry. Okay, so right now, obviously what it's doing, it's coming into this movement to the downside on the 1 hour. Again, we have not opened a New York session. So what I'm looking at is that this was the big push at the 1 hour time frame. We come up and look at the candles that went forming. We have the last bearish candle, came up and closed that contract. And then we have another, like a big amount of bullish candles. We have this bearish candle, closes contract, and continues going up. Now look at this area, how it has so much liquidity in here. There's so many equal lows here. There's so many wicks. So that is a potential area that could be taken out. I am just keeping an eye of this, becoming aware of where it could be taken out. So I'm going to match better my area of imbalance, all of this up to here. Okay, perfect. Now let's go down to the 30-minute time frame and keep on looking. Okay. On the 30-minute time frame, this is where the strong move started. This is where the institution said, okay, let's start selling. Boom, 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 boom. Okay, this is where it began. Now, here you have a I guess you could call it order block or disturbance candle. We have down candle, down candle, down candle, boom, 2 bullish candles, and then down candle in the midst of where your institution moved. So here, these 2 up candles, look at how it comes up and it mitigates from these 2 up candles. Mitigates and then continues going higher. So in this higher push, we have this move going a lot higher, right, and closing those contracts that it left. Let's go down to the 15-minute time frame. On the 15-minute time frame, we see the same. Down, 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 bullishness, down, and then just all of this wicked area, and keep on going down. But notice how it comes into the area again, fills all of that void, and then continues going higher. 5-minute time frame, it does the same thing on the 5-minute. Continues going down, breaks structure, already closes all these contracts. I mean, we do have this one that slightly opened, this last bearish candle right here. Boom. Bullish, 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 bearish candle. That's your disturbance. Bullish, bullish, bullish. Okay, so this, you know that this contract is still open, and you have a lot of liquidity right here. And there's news with the USD at 7:30 a.m. There's 2 red carpets. So my lines are a little fake, so let me just make them stronger. Okay. Okay, so those are the 2 potential areas that we're looking at. If you don't remember, we got this line over here from the Fibonacci level. This was from the 70% level of the Fib. So now that we've assessed all of the things that it's looking at, now what I want to do is wait for it to come into the areas that we have. I want to wait for it to come into these specific zones as soon as the market opens. If the news hits at 7:30, what is it going to do? Is it just going to come down and then go up? or how is it going to react, right? You don't want to execute off the bat because you don't know what it could possibly be doing. You don't know if it could just literally buy or just sell off and like fake you out, and then you don't have your confirmation. So what I like to do is that when it comes to your entry point, I go on to the 1 minute time frame, 5 minute time frame, and I'm looking for the same confirmations. It's fractal. It's literally fractal, and it'll happen over and over and over again. So that's why you have to memorize these confirmations and have it do it over and over and over again. Program your subconscious that now you see it everywhere. Like you even see it when you're sleeping. So as soon as it gets down to this area, what I want to see is for it to come down, break structure to the upside, show me that we're going up, and then come down again, mitigate in that area, and then continue going higher. So I'll only buy off of the reaction it gives once it comes into that purple line that we have an entry zone, a potential entry zone. I'm not going to execute as soon as it gets there because, again, I am not sure if that's the entry. I want more confirmations on the smaller time frame as soon as it gets down there. We have not yet gotten there. Again, this is our 70% fib level, and down here is our 5 minute level entry in this area. So I honestly see it coming down to here with the news that hits and stuff like that, down to this area. I can't see the number. Okay, so these are the two zones that I'm going to be looking at. I'm playing off of this order block right here. We have not yet gotten there into that order block, and this little tiny 5 minute disturbance that we saw. So those are the areas that I'll be looking to wait to see for that reaction. But I already have my setup. I'm ready. I'm ready. I'm not waiting for New York to come and, okay, wait, let me look at my chart, as you know that you're supposed to be like you're supposed to already be prepped up to trade. It's not like um okay, if I heard this quote that said, if you're prepping, you don't okay, if you prepare yourself, you don't have to be ready. If you prepare yourself, you don't have to be ready because you're already ready. You're prepping yourself. So this is us prepping ourselves to take that setup and wait for it to potentially come up there. Of course, matching with the DXY as soon as the new hits. But this is more of like when news comes in and gives us that reaction into the market. Um, yeah, and then let's go on to Euro USD. I mean, do you guys have any questions about AUD USD? No questions? Okay, 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 so I'm guessing that was clear. Okay, perfect. So,
I've got a question.
yeah.
So do you wait until after the news to see the reaction, or do you just see what's happening around that time, or do you always wait until after?
I'll trade it after, but I'm looking at it when it's happening. I'll trade it after though, like after I see the setup, like the news plays out. Okay, so for Euro USD, it's kind of the same play out. Honestly, this week we were waiting for a buy around here and then continue taking it higher all the way to this liquidity area in there. So this is still going to go higher. I see it that way. If you can look at the structure, look at how it's been forming. It has not been breaking below this low to tell us that we broke structure and we should be looking for sells. No, it has not done that. If anything, look at the first step, structure, right? That's what I just did. And then we identify the liquidity, look at the liquidity above here. There's so much money here. So this is a target. It has to come and fill that target. Again, now let's look at the liquidity down here. Look at the liquidity, tiny liquidity down here in this area, like all of this, even. Boom. And here to here. And then what's the candle that captured that liquidity? That's your institutional candle. If you have nothing that captured liquidity, then that's not an institutional candle and you should not be looking for an entry in that area. So this is the one that captures it. And then we break structure. Look at how we come down, 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 down. We break structure to the above side. So now what we're waiting for is a retracement to continue taking it higher. So, oops, I don't want to do that. Let me just mark it up again. So let's go on to the 1 hour time frame and see what it's doing. So here on the 1 hour time frame, this is that 4-hour institutional move. Let's mark a line on it right there. And look how it already came into that area. We push up and then boom, here we come into that area and continue going higher. That's honestly what we want to see. But again, because we're waiting for news, we might not know how the reaction could play out. So here, if we do our imbalances, I'm sorry, I kind of missed that out on the 4-hour time frame. There's an imbalance from here to here in that area. There's not much of an imbalance over here. You can consider it if you'd like, but I don't really see it. It's more of like, that's how I see it. So on the 1 hour, it just looks like a bunch of candles, right? But it's still there. I can't ignore it. So now the last one is grabbing your fib level. So I'm going to grab it from the low all the way to the high. And look at how the line I just marked matches with my 78.6%. So what I'm hoping for is for the market to come into this area, and then I'll look for a buy, even if it doesn't happen in news, and I'm not going to trade it. I'm not going to trade something that I do not see, or just make up something up in my head and then just be like, okay, like I'm going to sell and then buy. No, just wait for it, wait for the setup that you have. However, because we are about like an hour away now from the news, anything can happen. Honestly, it's 2 red carpets. It's core retail sales and retail sales. I don't really know what that means, but I just look at the carpets, and if it's 2 red carpets, I know it's going to be strong. It's going to be strong, and it's going to push the market. So whether it be pushing the market to the downside or pushing the market to the upside, I can still catch an entry after the news hits. So regardless, I'm sure that, or wait, the bounce back is in Spanish for Friday, so they trade bounce back too, but they're going to trade the after news of the setup playing out. So right here, what we're doing is just consolidating. This entire move is just consolidating. So what I want to see is that break out of the consolidation and then look for something else. It's not too clear for me now. I honestly think the setup's going to play out next week for this buy. We could potentially come into that area lower, but if the news hits and breaks out of this consolidation, then I'll be looking to execute over here to then take it higher. Stop loss would be over here, and this is that last push to the downside. If in fact the market pushes up, and then I'll be executing in that specific area, and it'll be the same as AUD USD, just different pattern zones. It doesn't look exactly the same, but the bias of being a buy is. So if this does not break to the upside, I will not be looking for buys. If it breaks to the downside, I'll be waiting for it to come down and then execute here, and then wait for that reaction again. Like, you don't want to, I'm going to show you guys an example. Let's go to USD CAD, the sell that was given out this week. Right here. This was a sell from this week, right above here. So this is the candle you're playing off of. This is your institutional candle right here. So if this is my institutional candle, this is what I'm playing off of. What is this reaction? I'm going to go and into the 5-minute time frame. Let's imagine that this is what's happening right now at this very moment, and we want to trade it. We want to trade it. It's in our zone. So what we're going to do is go on the 5-minute time frame. We see that it has yet to come up to our area up here. This is our last push to the upside on the 5-minute time frame. This is where the entry is. So what I'm going to do is look how it's going to react when I gets to my potential entry. And it's always, I suggest you do back testing with this. Back test your entries, because that's a major role in your trading. Look how it's creating liquidity above, and it's just consolidating. It has not broken structure. It has to break structure to the downside. Again, do your confirmations over and over again. Structure, liquidity, imbalance, Fibonacci, and then your institutional move. So we have to wait until it gives us that reaction. Now let's see what happens. Look, it comes into our entry area. I'm not going to execute there because I want to be sure. I want to minimize my stop and maximize my profit. That way I can get a better risk to reward ratio. So it has not broken structure yet. Look how it's going up. For me, it has to come down in here, break structure, and then do whatever test it needs to do, and that's where I'll be executing to go down. If it does not do that when it comes to an entry area, the purple line is the entry area. You have to wait to see that reaction. Now let's see how it plays out. It comes back into that entry area again, and look, it finally comes down to break structure. Finally. So how is the setup going to play out? Perfect. Now I'm going to look at the same patterns. All of this is in balance. We broke structure to the downside finally. We have our up candle over here, but we already mitigated off of that up candle right there. So because we've already mitigated, I'm not going to look to enter over here. I'm going to look to enter based off of that, where did the push to the upside begin? The push to the upside began all of here. And when you have 3 up candles like this has a name. It's called a buyer's remorse. When all of this captures liquidity, money, when it captures liquidity, where is the push that began to the upside? Here. Here's where all the buying began, right here. So I'm going to look to enter off of where the buying began. So all the way here. So it'll look something like this, and then stop loss would be right above that, 4 to 5. And then you'll continue taking the setup to wherever we were looking at it, like all the way down here. And then it comes into your area. I'm not going to look at it all the way above here because again, it's already been mitigated. You want to see where that push to the upside began, all the way from here to here. That's where the push to the upside began. And this is a good reaction when it comes to our entry point. Sometimes it won't give you that. It won't give you that. It won't give you a good reaction. Therefore, you're not going to trade it. You're not going to trade it because it's not going to give you a good reaction. And then that'll just mean it was a false flag. It was a false thing that you saw that you wanted to enter so badly on. So this is the kind of things that I do when I'm executing an entry. So this is the kind of things that I would say wait for with AUD USD and Euro USD for it to give you more information on that 5-minute time frame wherever your entry is. Wherever your entry is and you're looking at it, just wait for that price to, whether you're looking for a sell, wait for price to distribute. This is distribution, this right here. Whether you're waiting for a buy, wait for price to accumulate for you to buy. I'm going to show you guys now Euro USD where it gave off a buy this week. See, right now we're still ranging in that zone. We have not gone out of that consolidation. I'll show you guys the buy of this week all the way down here. That was so beautiful. That played out. Let's go on to the 5-minute time frame. I mean, I've already played it out as far as I could go. So the entry area was here. Just pretend like we went into the past and the entry area was there. So now let's see how it reacts into the entry point. Look how it's coming down. Look at the structure. And then we break out of the structure here. So now we know it's going up. Okay. Now here, it doesn't really have a reason for it to come down here again. It's already closed whatever it needs to close. We have an order block about here, and it looks like it already came and filled in, not the body, but the wick. Regardless, it still came into the fill in that area. And then we have a little tiny order block over here. So now what you're going to play off of is going to be those order blocks. If order blocks, or however you want to call it, disturbance, whatever makes sense to you, candles that are going up and then you have one candle that's going down, candles that are going up, the candle that's going down, candles that are going up. So because you're bullish, The ones that are disturbing your bullishness are these bearish candles. So those are the contracts that are still open, and those are the areas you'd want to look for buys after it comes into your entry zone. And well, it breaks structure and it tells you, okay, I'm super bullish now, buy me. So you're going to want to wait for it to come into that zone, and then you'd continue buying higher and higher. In this case, we just kept on going higher. You play off of the 15-minute or even the 5-minute. It would be the entire like candle. I'm just showing you guys for purpose of like example of what I mean when I say wait for when it comes to your entry level and shows it to you. When it shows it to you, then you're more sure that you can trade that entry area. So we've been going up the entire week. So I mean, not the entire week. This just started like on Wednesday, but it's the end of the training session. So now we have a more clear bias that, well, this is going higher, and it kept on breaking structure to the upside. So now what we want to do is wait for more buys, wait for the buy area. So again, I have a strong feeling that it's not going to go to the upside. I feel like it's just going to come a little lower and then perhaps go into the upside. I'm not going to look for sells because I'm going against the trend. This trend is going higher. This trend is high. So I wouldn't, if I'm looking for sells, I'd be super cautious. I've done that, been there, done that, where, oh, I see a buy over here, so let me sell in the area of it coming down. I've done that, and you have good days, you have bad days when you're doing that. So if it doesn't work for you, don't do it. It didn't work for me. I had good and bad days, so I was like, nah, like this isn't working, so I'm just gonna wait for my setup to play out. But if it works for you, then go ahead, just sell it off and then buy it, like hedge it. It's something a lot of traders do. It's not normal. I mean, it's normal to do, but if it doesn't work for you, don't do it. Don't force it. Just practice it. So this is what I'm looking at. These are my two potential, oh, I'm sorry, not this one. This entry here, and again, if we break out of the consolidation to the upside, I will be looking to buy based off of this last down candle here. Only if in fact it breaks. If it does not break, then I'll just stick to the bias of down here and wait for it to play out. Whether it doesn't give the entry today, it's okay. You don't have to trade every day. You literally, I only trade 2 to 3 times a week, like Tuesdays or Wednesdays. That's it. If you're trading a lot, if you're trading more than 10 trades a week, you're doing it wrong. That's not how we're supposed to do it. It's supposed to be 2 to 3, 4, 5, 6 setups, 6 good trades that meets your percentage, the percentage that you need to meet for the week. If you don't have a plan, then you're planning to fail. Because what's your percentage goal for the week? My percentage goal for the week is at least a 6%. So if I'm already meeting my 6% in a trade, I'm only going for 1 to 3, 1 to 3, 1 to 3, and in 2 trades, I'll make my 6%. So I don't really have to trade every day, but if I see another good setup, then I'll take 3 to 4 trades, and I'll probably make more or break even. It just really depends on how you move when you see the market, and not take every single trade that you see, because it will end up in something you don't want it to end up. So that's what I have for today, family. I appreciate everyone's time. It's about to be an hour since the call started. So again, I'm very, very grateful. This is kind of what I'm looking at for the setups today for New York. And I hope you guys see the same. If not, of course, just trade whatever you see. Don't go off of my bias. Go off of your bias, because honestly, the best person you can trust is yourself. Don't trust anyone. So trust your intuition. That's all I could say. When it comes to trading, trust your intuition and what you see. So thank you so much, Ivy. I appreciate you so much for having me on this call and sharing the knowledge that I have from the market, from like my personal experience in the market as well, the emotional side of the psychological part. It's definitely a roller coaster, but do not give up. It's worth it.
Guys, thank you so much. Thank you so much, Jen. I really appreciate your time. And guys, throw some love on the, or fire on the chat just for Jen. Most importantly, Jen, making time for us, Han. I really appreciate. Of course, time is the most valuable thing. She got up early in the morning, 6 a.m. to do a call for us. For me, I think that is just absolutely special. Like not many people would actually do that. So for me, I'm definitely grateful for that. I honor you, Jen, for doing that. You're just an incredible, incredible human, and actually the value that you drop for us, just out of love, out of care for us. And thank you just, for saying yes to actually doing this call for us. I truly appreciate you. I hope you all guys got some value. Definitely, get back to Jen if you have any, gratitude messages. She'll definitely appreciate them. And thank you guys for also being on the call. And yeah, Jen, I wish you a lovely day ahead. And everyone else have a great night and a great day in the UK as well. So thank you all for being here. Thank you once more, Jen. Appreciate you, girl, and have a great day. And thank you, everyone else. Cheers, guys. Have a great night.
Cheers.
Thanks, Jen.
Bye. Thank you.
Thank you.